Hello and welcome to this weekly market recap for the week ending Wednesday, July 30th, 2025. I'm Tom Bowley, Chief Market Strategist at EarningsBeats.com, and it is a pleasure to be back with all of you again this week. Interesting show today because we just had a Fed announcement this afternoon. We got our Q2 GDP report, initial GDP report out this morning. We had an ADP employment report that came out this morning. We got jobs coming out on Friday, the latest jobs report. We had Meta and Microsoft just report earnings after the bell on Wednesday, and we've got Apple and Amazon both reporting after the bell on Thursday. So not only do we have a week to recap, but we got a lot of stuff coming up here that I think is going to be really important to watch in terms of how the market may perform here in the near term. Earlier today, though, we did have the Fed statement. I wanted to start with that. I wanted to just point this out. There really wasn't a whole lot that changed. However, the changes that they did make in the wording from the last meeting to the current meeting concern the economy. And you can see it says recent indicators suggest that growth of economic activity moderated in the first half of the year. They changed that from has continued to expand at a solid pace to moderated in the first half of the year. It sounds like, maybe a little bit of a downgrade to the economy there. And then also uncertainty about the economic outlook remains elevated. They got rid of has diminished. So now it just remains elevated. I don't know. To me, it seems like there wasn't a whole lot that changed here, but what did change was maybe the Fed's thinking that the economy has softened a bit. And that's interesting because there was no change to interest rates. That's what was widely expected. They did not change interest rates. I thought they should have changed. I thought they should have cut. I've been saying all year, I think at every meeting this year, they should have cut 25 basis points, but they have not. The most interesting part, though, for me, was down here at the bottom. Voting for the monetary policy action, and we go through everybody that voted for it, but voting against, look at this red down here. Voting against this action were Michelle Bowman and Christopher Waller, who preferred to lower the target range for the Fed funds rate by a 1/4 percentage point at this meeting. Now, you might not think that's a big deal since it was still, voted in. The majority, overwhelming majority, did vote in the no change in rates. But folks, this doesn't happen. We have to go back to 1993, 32 years ago. That was the last time that you had two Fed governors dissent from the rest of the group. I mean, if there's one thing that's consistent about the Fed, it's that the Fed chairman goes out essentially and gets support for whatever is going to be done at that meeting. Again, we got to go back 32 years to find a Fed meeting where two Fed governors dissented. So not only does the stock market and the bond market not trust what Fed Chief Powell's doing, but he can't even get his own group to trust what he's doing. They're voting against him. So I think that's a big deal because I think it really underscores part of the problem with this current Fed. And the reason why, in my opinion, we've suffered through 4 cyclical bear markets in the last 7 years, which is unprecedented. We've never seen it before. I'm not sure this Fed president really gets what's going on until it's too late. And he seems to be very adamant and stubborn about not wanting to cut rates. Again, we could have a debate. There's probably plenty of you out there that think that the Fed's doing a great job. I would love to get involved in that debate because I got a lot of points going back these last 7 years that suggest that he's been late to every single party and he's late to another one. And even the Fed officials are starting to get a little bit fed up, no pun intended, with what's going on in these Fed meetings. So anyway, just wanted to start with that. Let's go and take a look at what's happened over the course of the entire week. Now, just a reminder, this is from last Wednesday's close to this Wednesday's close. That's the week I'm looking at. Just wanted to, I like to give these midweek updates. So anyhow, I just want to make sure you're aware and understand what we're looking at here. So over the course of last week, you can see the NASDAQ and S&P 500 have actually eked out more gains, but the other major indices have dropped. And you can see transportation took a really big hit this last week. The Russell 2000 small cap index also did. And it kind of makes sense to me because this area of the market not only struggled after the Fed meeting today, but this area had been struggling on a relative basis the last few days. And I think the reason was a lot of folks don't trust the Fed. I think there's a lot of money that's been rotating into small caps and into transports, believing that we're going to have lower interest rates later this year. And those lower interest rates should positively impact those two areas of the market. But as we're getting closer and closer to the Fed meeting, we know that the Fed has a history of being late to the party and consistently wanting to keep those rates unchanged. And while I think there were a lot of market participants hoping that the Fed would say something about a possible rate cut in September, I think the Fed really did everything they could to steer in the other direction. They don't want to give any hints about a rate cut. So I think a lot of folks were selling those small cap stocks and selling those transportation stocks ahead of this meeting, taking their profits. I believe that trade will resume, but it's probably not going to resume until we start to get more indications of rate cuts. At least I don't expect to see massive outperformance by those groups until we get those signals. Anyhow, just wanted to point that out because that was quite the bifurcation over the last week. As far as sectors go, technology leading the market, which helps the S&P and it helps the NASDAQ because technology is such a large component within both of those two indices. So anytime you see the technology group performing like it did last week, significantly outperforming many of the other sectors, that normally is going to favor, from a major index perspective, it's normally going to favor your S&P 500 and NASDAQ 100. Now, I have a chart list that I'll show you a little bit later in the show that'll help to explain that. Looking at the S&P 500, we haven't seen too many down days of late, and certainly haven't seen too many where we've had back-to-back days to the downside. I think the last time that happened was earlier in July, where we had a couple of small moves to the downside. That's essentially what we've gotten here. We did see some pretty good selling after 2 o'clock today. If I pull up an intraday on the S&P, you can see it about 2:30, right? This is just about when the press conference began. And I kind of joke about it, but it's true. It seems like every time Fed Chief Powell starts talking, the market sells. And it happened perfectly at 2:30 today. I mean, looked like we were going to make a move to the upside, and then he started talking about interest rates and the fact that they didn't want to cut. They're not looking at cutting in September, or they're not, considering that right now. And the market just sold off hard. We did see a little bit of recovery into the close, and we did get some key earnings after the bell today that have futures looking pretty good on the S&P and especially on the NASDAQ. And we'll talk about that in just a little bit later. But we did see a lot of selling after that Fed announcement at 2 o'clock today. The NASDAQ 100, very similar to the S&P 500, although we did cling to some gains at the end of the day. Probably some optimism about Meta and Microsoft reporting, and that was justified based on the numbers that came out after the bell. If we look intraday at the NASDAQ 100, you can see again, after 2:30, we did have selling, but we got a nice recovery later in the session, and it did carry us back into positive territory on the NASDAQ. Small caps, this is where we've seen a little bit more weakness. We've been seeing this sideways consolidation for the past probably about 3 weeks. And again, I think some of this, we had excellent relative strength in small caps late June into early July. I thought that there was a chance that we might even see a rate cut at this meeting. Of course, I'm just being a little bit too optimistic. Probably should have known Fed Chief Powell was not going to cut rates until it is absolutely essential that he does so, because that's just what he does. He waits until the last minute, late to the party. But over the course of the last 2 or 3 weeks, you can see, I think, some of the money that's been rotating away from small caps, also away from the transports. I'll show you that chart in just a minute. It's much easier to see on the transport chart the last couple of days. But I wanted to show you the intraday on the IWM because look at the selling. The selling was much, much more extreme in the small cap area this afternoon. We did get a little bit of a rally, but not as much as we saw on the other indices. And we still did finish quite a bit in negative territory today with the IWM closing down over 0.5%. Transportation stocks, you can see the selling much more clearly. We're back down near the 50-day moving average. I really would like to see this level hold 15,000 to about 15,250. I think was big resistance previously. So I don't want to lose that level to the downside. So we have a little bit more room, maybe another couple percent on the transports to the downside, maybe 3% tops. I wouldn't really want to lose more than about 2 or 3% here on the transportation group in the short term. 10-year Treasury yield, not a whole lot of movement here. We've just kind of been going sideways. Don't really think there's a whole lot to talk about. I would just say that the 10-year Treasury yield is not soaring to the upside, which is what I would be looking at if I really thought inflation was a problem. I would be expecting a lot of selling to go on in bonds, which, of course, the falling bond prices would send the yields much higher. We're not seeing that. And we've been going mostly sideways, really, for the last several months. So 10-year Treasury yield not really telling me anything to worry about inflation. I still think if there's anything to worry about going forward, it's the economy. And if we keep rates too high for too long, that's what could trigger, a potential recession or at least a more significant weakening of the economy later in 2025 and into 2026, something that the Fed should want to avoid. After hours, I wanted to bring these up. Microsoft came out after hours. Let me give you some of these numbers. Really, really big numbers. Microsoft was expected to come in with revenue at 73.7 billion. We came in at 76.4 billion. So a huge beat in revenues. Meta, I'll be showing you this one in just a minute. Meta was expected to come in revenues 44.8 billion. We came in at 47.5. So a massive beat. I mean, these are huge companies beating revenue estimates by a wide, wide margin. If we look at the earnings, Microsoft expected to post $3.35, came in at $3.65. So almost a 10% beat in earnings. And Meta expected to come in at 5.83. I mean, this number is mind-blowing. And supposed to come in around 583, came in more than 22% higher, $7.14. I mean, Meta hit it out of the park. And we had an event just on Monday evening talking about earnings. We were going through Q2 earnings, and one of the things I was doing was evaluating the Mag 7 stocks and the 4 big Mag 7 reports that were coming out this week: Microsoft, Meta, Tesla, and Amazon. Apple and Amazon. Apple and Amazon both come out Thursday after the close. But talking about these two, I expected a good report out of Microsoft, although I didn't give any specific predictions. But on Meta, which you can see is up 12% after hours, $85 to $785. We had closed at $695. On Meta, this is the chart that I showed on Monday at our session. This was the high coming up here at about 745. And then we had come back down over the last few weeks. During the quiet period, we had pulled all the way back down below 700. But during the quarter, look at Meta outperforming its internet peers. Just massive outperformance. So in my opinion, I thought Meta was going to have a blowout report. And what I said to our members at our Q2 earnings update on Monday evening, my prediction was that Meta would gap up with earnings above 745. I really looked for a break above the recent resistance. This is also, let me show you this on a weekly chart. So here off of this uptrend, do you see this cup? And then the handle that's been going in during the month of July. So we had a cup and a handle. This breakout above 750 measures up almost probably another 260 to 275 points. I mean, we're talking about probably Meta going up and becoming $1,000 stock based on, I mean, after hours might not take long the way after hours is going. But this is a beautiful bullish pattern. A lot of relative strength we saw going into or throughout the second quarter. And this is the kind of reaction I was expecting. And it's the kind of reaction we're getting with absolute blowout earnings. Folks, this is why relative strength is so important, because it's giving us a signal that Wall Street, Wall Street, these big Wall Street firms go out, they talk to management. And then they go back to their home office and they're like, okay, let's buy this one, buy this one, buy this one, let's sell these. They get their pick of the litter. And the way you see that, and the way we can all see that, is through the charts and through relative strength. So anytime you see a company that's, showing relative strength like that heading into earnings, chances are, it's not a guarantee, but chances are we're going to get a solid report. And then we just have to figure out, what kind of reaction. Sometimes you get a great reaction to the upside. I think you have a better chance of that if you have a pullback before earnings. I think if you're just screaming higher going into earnings, I think that it becomes a little bit more hard to predict whether or not you're going to get an additional pop to the upside, or maybe where we'll see a little bit of sell on the news kind of a situation. But anyway, Meta, Microsoft, both blowing out earnings after hours. The QQQ up very nicely, up close to 1% last time I looked after hours. So it looks like Thursday's going to get off to a good start. By the time you see this video, you will be able to check it out and see where we are. But Microsoft and Meta both with very, very strong report. Now, I mentioned we had an event on Monday. We have a free event coming up next Saturday. So Saturday, August 9th. And if you go over to our homepage at earningsbeats.com and scroll down, you'll see a link to this sign up page where you can sign up. It's a free event to the public, but you do need to register. We've been doing portfolios at EarningsBeats now for over 7 years, or for roughly 7 years. We started our model portfolios almost 7 years ago. And if you click on this link, it'll bring you to this page, which is our sign up page, name and email address, all it takes, no credit card. It's completely free. But you can come in. We're going to have the event at 10 a.m. on Saturday, August 9th. But if you go down, we talk a little bit about, our portfolios, and we take a very simple approach to putting stocks into our portfolios. And if you look back over the last 7 years, since November of 2018, an initial investment of $100,000, our model portfolio is now worth $423,000. That same $100,000 invested in the S&P 500 is worth $237,431. I mean, that's $137,000 in profit on a $100,000 investment in the S&P versus a $322,000 profit through our model portfolio. That's way more than double the S&P 500. And if you do any research, portfolio managers, whatever, it's rare that portfolio managers can even beat the S&P 500 in consecutive years. Most portfolio managers fall short in trying to outperform the S&P 500. We have crushed it. And it's a simple, simple process. So come join me on Saturday, August 9th, 10 a.m. And I'm going to show you how simple it is to just go through, narrow down. There's a couple filters that I go through to clearly come up with the stocks that we like in our portfolios. It is a repeatable process. We do this every 90 days after earnings season. So come on in. I'm going to show you exactly how you can invest more confidently and show you the steps that we go through to pick these stocks that crush the S&P 500. If you are on your mobile device, there is a QR code that's on your screen. All you have to do is scan that code, follow that to a landing page so that you can sign up on your mobile device. This is really important. If you cannot attend, still make sure you register for the event because we will send you a copy of the recording. All right, a couple things before we wrap up here. First, just wanted to point out, here is a chart list of what I think are the 10 most important stocks in the market. We could argue maybe down the bottom second half of these stocks as to whether or not some others are more important or not. But these are all mostly growth stocks. And so for me, I think they are really important. The first percentage that I have on this is the representation of that stock in the S&P 500. And the second percentage is the representation of that stock in the NASDAQ 100. So you can see NVIDIA, 7.32% of the S&P 500, and it's 9.15% of the NASDAQ 100. If you add up the first numbers, so these are the S&P 500 numbers, if you add up all 10 of these stocks for NVIDIA, Microsoft, Apple, Amazon, Google, Meta Platforms, Broadcom, Tesla, Netflix, and Palantir, add all 10 of these up, and it represents over 36% of the S&P 500. If you add all 10 of these up, the second numbers, it means that these 10 stocks represent over 52% of the NASDAQ 100. Now, I know there's a lot of folks out there talking about equal weighted this and equal weighted that, and we want to make sure that there's a lot of participation in these moves to the upside. Folks, if you're trading the spider or you're trading the QQQ, here are 10 stocks that you need to focus on. These are going to have a massive impact. I don't care about all the other thousands of stocks that are out there. These 10 right here are going to have a major impact on how the S&P 500 trades and how the NASDAQ 100 trades. So you can look at all these other hundreds and thousands of stocks if you want, but I'm going to feel pretty comfortable if I like these 10 stocks. And so anyway, just wanted to mention that. I mentioned earlier, Microsoft, Meta having blowout earnings. I'm just going to give you maybe about 7 or 8 stocks that will be reporting after the bell on Thursday that I think are setting up for good reports. Now, it's hard to make predictions that a stock is going to explode to the upside like we saw Meta and Microsoft do, but these are stocks that are performing well that I believe are going to come out with some good results. And we'll see. First one I want to mention is Stryker. That's in the medical equipment group. The stock just made a breakout on a closing basis. But if you look at these stocks, they have some similarities. They tend to have strong AD lines. They tend to have strong relative strength lines, as you can see on Stryker. And as I go through each of these, I think you'll see similar type charts. MicroStrategy. This one's actually pulled back quite a bit from its recent high at 460. It's now trading just under 400. It's going to be really interesting to see this company's report, and if it is solid, whether or not we get a big gap up on MicroStrategy. But I think the AD line remains still strong. Even, with the selling recently, the AD line's only pulled back slightly. The relative strength over the last 3 or 4 months has been trending higher. So I like MicroStrategy going into its report. Coinbase Global, we just saw a massive run to the upside, and this run was accompanied by extremely heavy volume. The relative strength line is pretty obvious. AD line has been soaring over the last 3 or 4 months as well. But the stock's pulled back now for a couple of weeks just before its earnings report. Are we going to get a big report and a gap up to test the recent highs, maybe even break out? I don't know, but it's one to watch. Cloudflare, this is one of my favorite software stocks. AD line has been extremely strong. Price action's been great. We keep forging to new highs. Relative strength, we're sitting near a 52-week relative high versus software. I'm expecting a big report with Cloudflare. Live Nation Entertainment, AD line continues to be very strong. This is the accumulation distribution line, by the way, not the advanced decline. Some people get the ADs mixed up. AD in this case is accumulation distribution. It's a signal that the stock seems to be accumulated because it tends to finish in the upper half of its candlestick throughout this period. That's why the AD line continues to move up. It is getting close to a 52-week high. It has been sitting near its relative 52-week high as well. I'm thinking good news is coming out on Live Nation. A couple more here. One Rocket Companies. We just saw recently a big gap up in that black candle off of an uptrend that is normally a reversing candle, which is exactly what it did here. It reversed the uptrend. It sent us back down to the 20-day moving average. But now we've come back down to the 20-day moving average, and we're close to $3 away from the recent high. Do we gap back up with earnings? Well, stay tuned. Mastech, MTZ. I pointed this one out to our members within the last quarter. This is a company that raised guidance strongly in the last quarter, and the stock has continued to go up. That AD line is soaring. Seems to be a lot of positives going on here. It's one of the best stocks in the heavy construction area. And here in the bottom panel, look at how strong heavy construction is relative to the S&P. So when you get a really strong group and you've got a stock that's been near the 52-week high relative to that group for a while, raising guidance, looks to be accumulated. I think we're going to have a big report out of the stock. Again, I don't know if we gap up or maybe we have a sell on the news, but if we get good numbers and then we get a sell on the news, I would be a buyer on this stock on weakness. Roku, last one. AD line started to soar in the second quarter. We've just kind of been going sideways here and consolidating during the quiet period. But look at the relative strength. This is one of the best performing computer hardware stocks right now. So is it setting up to deliver some big numbers? I don't know. Could be. Anyhow, that's what I got for you this week. Again, Fed, no change in interest rates. We do have a big non-farm payroll report coming up on Friday. If the ADP report is any indication, we should have a decent number coming out on Friday, but those two are not always positively correlated like that. So it's going to be very interesting to see how the market reacts. We do have a couple big earnings reports that just came out, Microsoft and Meta. That should help the market on Thursday. I would personally be very careful with Apple. I'm a little concerned about Apple's chart heading into earnings. I think Amazon should be fine. But Apple, still 5% of the S&P 500. So let's, be a little cautious, a little bit more cautious going into Thursday's earnings. And then especially with non-farm payrolls coming out on Friday. Anyhow, everybody have a great rest of your week. I'll see you next week. Happy trading, everybody.